Welcome everybody to the HyperPod. Today we have Omnia from Kinetiq with us. How are you doing?
Good. How about yourself, Ben? Thanks for having me.
Good. Yeah, feeling bullish. Watching Hype reclaim $20, and really just patiently waiting until we hit $100. I think it's just a matter of time.
Yes, sir. 100 plus.
100 plus, yeah. I tend to be a bit more conservative just because I don't want anyone to ever quote retweet me and be like, you said this price. But at the end of the day, right, we have to believe in something.
Yeah, exactly, right? What is what we're doing without belief, right?
There we go. All right, so let's jump straight into it. I mean, we talk about belief and being a believer. Why are you actually here, and what was your journey to getting into the Hyper EVM and Hyperliquid as an ecosystem?
Yeah, great question. Overall, I would definitely be lying if I said that Hyperliquid with my co-founder, that we it was going to be. And I think this is really understated, or this overall pretty, I would say, underappreciated by people who who came to Hyperliquid. I don't see this often or at all, but for the most part, I think it's just very clear that those that came around Hyperliquid really early, whether it was 2023 or 2024, it doesn't matter, but it just should be very clear about the fact that it was not obvious what was going to happen, at least not until a specific point. And for me, that point was April 2024. But when I actually found out about Hyperliquid, funny enough, again, to the month was April 2023. My co-founder and I were listening to a quant podcast called Flirting with Models, and we heard Jeff talk about Hyperliquid. I think that was his first ever Hyperliquid podcast.
Yeah.
And it was funny. That was not our intention at all. It's not like we saw a tweet or anything like that. And I mean, man, I don't even think I had seen Hyperliquid mentioned on Twitter ever at that time, no keyword related stuff at all. And this was, again, 2020, before mid 2023, right? Market was so boring, such a lull. I remember looking at, I was just about to listen to the podcast. I was like, man, do I want to join another Discord? And anyway,
I know.
Dude, yeah, I was just like, oh man. So I end up listening to it, and I was just really inspired and pretty moved by everything that Jeff had discussed. And in particular, by the way, I really encourage everyone to go listen to it, because it's really quite funny to hear Jeff talk about Hyperliquid back then, and obviously his experience and whatnot. But nonetheless, yeah, I was quite inspired actually after that to go into the Discord and hunt around. And yeah, I didn't come to it with really anything, because at the time things, again, were so boring. It's I'm not a farmer by trade at all. So I don't really look for things to quote unquote farm. I actually fucking hate that word, farm. So yeah, I guess the best way to put it was I ended up, I guess you could say, getting lucky, finding a referral code pretty quickly. So I wasn't discouraged by the fact that there weren't any available or anything. Yeah, jumped in pretty quickly. I'm not a massive perp trader, but one thing that I do like to do, guilty as charged, is I am my friend Guthix. You guys may have seen him say this.
You're already degenerate. It's okay to say that.
Yeah, exactly. He's mentioned that I'm the chief of non-toxic ETH order flow, because basically my mentality around leverage is if there's 50 available, why would I use 20, right? Let's just max out the slider bar. So I'm it's funny. I try to be my own client, right? Whoever I want to build something to appeal to, I should be that myself, right? Because I can just give myself the best, advice, right? So yeah, man. I mean, it's been really funny. In other words, just the diversity between the three of our co-founders for Kinetiq in particular. We all have very.
How did you guys meet? What's the story there?
Yeah, so we all used to work at a protocol called Redacted Cartel, which is now known as Dinero, quite some time ago. So that's where we met and actually ended up working together. Well, yeah, Magnus and I, we met differently. We met through when I was working in 2020 at a liquid hedge fund. A friend of mine at the time had introduced me to Magnus. So it was just a mutual of Magnus and I, and then Justin, who's our third co-founder. him and Magnus met at Redacted Cartel at the time, where they were part of the founding team, and I was brought on to be co-head of BD there. And yeah, this was after my time in like Liquid and Venture Fund. And then also, yeah, so that's like where I ended up meeting Justin myself. And then, yeah, so over the last few years, we've worked together on various stuff, traded together, done a bunch of cool personal shit together. And yeah, like the opportunity around Hyperliquid was super funny because, you know, we had been talking for months on months and months on end, like having calls almost daily, essentially. And for the most part, with the majority of our friends that were doing this daily, Monday through Friday, you know, a certain time in the evening, you know, when things died down, we would talk about like whatever we saw happening on Hyperliquid, and then just kind of make a plan from there. And anyway, the point being that Kinetiq came about from a need to build a solution that we wanted for ourselves. Funny enough, like we started actually, you know, kind of putting together the idea around Kinetiq, where you know, what it would look like, what it would need to look like for us to be really excited about doing something like this, what it would be, how valuable it would be for people, et cetera, et cetera. This was before even Hype TGE was ever announced. So yeah, funny enough, like, you know, there was a lot of prerequisites for us to go and do this, which was like, is this going to be valuable for the ecosystem? Is it going to stand out? Is it going to be, you know, everything that we like to see from a product perspective? Is the vertical something that we're all truly excited about? And all of those boxes were ticked after quite some research, you know, going through every single Llama DeFi category, you know, from liquid staking all the way down to yield aggregation. It didn't matter. Like, we just wanted to see like what would we do that made the most sense and would be most valuable for the ecosystem as a whole. Again, this isn't even just for purely altruistic purposes. It's just like Hyperliquid has a culture of winning, right? Like, so it very much is Darwinism in its finest form, right? And at the ecosystem level, that's extremely important. Something that's essentially never been seen before. I guess you could say today it doesn't even really exist in Bitcoin. Funny enough, because like you have ancient Bitcoin rails, but like at the ecosystem development level, it's like, you know, unless you are, you know, doing really cool stuff or like really loud about what it is that you're doing, like it's just about knowing the right people in whatever ecosystem, right? And yeah, I mean, that's just a natural progression of anything ultimately, where, you know, naturally, I guess you could say like you build stuff, you meet people, and whatnot. So like obviously ecosystem have groups that form, I mean, look at Ethereum, right? And every other ecosystem that follows. But, you know, the most natural looks like Bitcoin. Next, I guess you could say would be Ethereum. And then like subsequently all these other L1s, whether EVM or not, they have this foundational cabal essentially, where like the actual foundation will choose to king make projects, right? Like, doesn't matter if it's Parachain or Solana or Monad or Mega ETH or whatever, right? Like they're not hiding this, right? Like there is a blessing that can come from the foundation to basically go and harbor these projects and like introduce them to capital and introduce them to, you know, their excited user base to use that chain or ecosystem or whatever. And none of that exists on Hyperliquid. So you really have to, it's a situation where it's like you eat what you kill, and not even just a predator prey approach, but more so like you have to be good essentially. It's a skill issue type thing, right? And if you're not gonna make it. It's really sink or swim. Whereas in every other ecosystem, you could be horrible, but propped up by the foundation, and you know you'll still live on. So it's just this crazy kind of, you know, escape of like zombified crutch-based ecosystems, and we were all excited about that. So, given our experience, it just made sense, and now you know it's grown to essentially like total of like 13-ish contributors to Kinetiq. So, yeah, man, pretty crazy. Very humbling, very, very exciting.
Yeah. No, it's like, I want to touch on a point there, right? So, you know, a lot of builders and maybe people in other ecosystems might have looked at like the launch of Hyper EVM and said, hey, like this is retarded. There's like no infrastructure and like you can't really, like you can't do anything. And I think that alone separated like the, you know, the believers and sort of the real builders from those that were just looking for like a quick grant or, you know, just looking to quickly try and sweep something up. And, you know, the people and the teams that were there and that did build at the very start, I mean, they're already reaping the rewards and they'll continue to grow and scale. You know, in my view, I think in both of you, like they'll grow to be 10x, 20x the size that they are even now. And I think that's what's great about Hyperliquid, right? It's like, you know, in a way, if you live off handoffs or handouts, you're basically, you will produce something that is like less than the best. Because if you have to fight for your, like if you have to fight for your food, basically you need to do your level best. And at the end of the day, this is what's great for users, right? Users get teams that are super hungry, fighting for market share in a healthy way, and that pushes the ecosystem higher. And you don't really see this in any other ecosystem, unless it's like a properly mature ecosystem. But most new chains that are trying to bootstrap are just purely driven by grants.
Yeah, exactly. Grants, like kind of like other kind of, I guess you could say, special treatment and support that, on Hyperliquid you essentially never get. I mean, Hyperliquid hasn't even paid $100,000 to TradingView for chart support, right? Like, I mean, it's the biggest perpetual DEX by far, and eating into centralized exchange market share, yet they don't even spare that type of expense, right? Which again is like ultimately a rounding error and daily fees, which is cool, but nonetheless, the point being, it goes so much lower than that, right? Like they will not pay Etherscan. All the block explorers are community built. They're not giving any sort of dollars or support to teams in terms of special treatment. To be specific, I want to be very, very specific here. Special treatment doesn't exist. So teams have to justify, migrating or, deploying on Hyperliquid or HyperEVM in particular themselves, right? Like there's an internal decision that they have to make. The team will do what they can to support, as in like, oh, you want to connect with such and such protocol, or do you have questions about certain infra that's deployed on Hyperliquid? Sure, they will connect you. Absolutely. I want to be super, super clear about that. Like, I don't want to say it's like a completely hands off, like don't ask the team for any questions. Like there are technical stuff that need to be addressed. So there is support at that level, but like in terms of special treatment or just anything that would separate, I guess you could say, one team from another based on bias or personal opinion, it just literally does not exist. So yeah, as long as you're doing a good job and you're obviously not a scammer, like I think just basic human DD, right? Like they would absolutely help anybody that's coming to seriously build within the ecosystem. And I think, yeah, if you're doing something good, like you have nothing to worry about. So yeah, I think those are super key points as to like what made Hyperliquid a very interesting choice for us. And again, just to touch on the fact that in April of 2023, when we found it, started trading actually in May on Hyperliquid, May of 2023 on Hyperliquid of that year. And ultimately, it's just been such a crazy kind of run up in terms of, I don't even care for price in this particular manner. I'm talking about just how the scope has evolved. And in particular, for those that actually don't believe what the fuck's coming out of my mouth, well, take it from Jeff himself, who has literally said that Hyperliquid scope has 100x several times. You can find the tweet. It's a really great one. And that's why I very much opened this with saying it would be dishonest of me to say that we believed Hyperliquid was going to be everything it is today in 2023. Like it's just not the truth, right? It was essentially just a place for us to trade. For me, what was most interesting about it was the fact that it was actually built on its own blockchain. The consensus mechanism at the time was Tendermint, 20K TPS, Arbitrum USDC as the only deposit asset. I joined during close alpha along with my co-founder Magnus. Like, yeah, it was really crazy in terms of like the different approaches that we took, like mine being more risk on with like maxing the leverage bar, but and his maybe more, way more risk off, but more so like with HLP deposits. And like, so we got really good at feeling out the platform, understanding what was different about it, and yeah, that was really where our edge came from. The fact that we were just users and community members first and foremost. And here we are now, just which is another interesting turning point, which is that so many of the apps, if not all, on Hyperliquid are all homegrown, right? It's all users of the platform who have then turned to building something for the platform. And I don't think any of that exists anywhere else, because it's not possible for it to exist anywhere else, right? Because not even Ethereum itself has an application. Like Ethereum itself is just a network, right? But not necessarily an application that people come to use. That's a bad reference, particularly because like Ethereum today doesn't know what the fuck it wants to be. But it's still fair to say that Ethereum is not an application itself, right? So there's applications built on top, yes, but Ethereum itself as a network has to exist first, right? In order for applications to be built on top. DeFi years after Ethereum was born. So anyway, with that said, funny enough, again, Hyperliquid being app-centric, if you will, in like this primary way. Maybe not forever, but the point being that, and by that I mean like, I believe that the EVM activity will at some point overtake the exchange activity, right? And the good news is that they're not mutually exclusive. Precompiles allow them to exist in harmony, which is just the ability to read balances across the exchange side or the EVM side, and then also be able to execute transactions from either side. So that for me is like the big connector, and the reason that they've put so much, obviously you could tell it's like love and care into not, I guess you could say, isolating or fragmenting the ecosystem at all. It's completely and totally intertwined.
Yeah.
So this is just really inspiring from a builder POV, for people that care to essentially understand like why it's interesting for builders. I know a lot of people like to touch on today, like HyperEVM's throughput of like 1 M gas or something like that, which is like very low. I think it's like 10K gas on the slow block, on the fast blocks, and then or 10 million gas, something like that. A very small amount on like the fast blocks in terms of gas limit, and then like a larger amount on the slow blocks that just have more space obviously for gas limit. But yeah, the point being, I think a lot of people just kind of from a developer experience so far are writing off Hyperliquid because of that. Whereas it was very clearly stated that this is just the initial beta of HyperEVM, and the fact that it will be scaled up over time. I think that a lot of people fail to read in between the lines about Hyperliquid and its kind of development cycle. This is clearly a decades long thing for the team, right? Like definitely life's work type of thing. So yeah, being a part of that is obviously extremely special. And yeah, I hope this perspective and across a couple of different areas gives people that kind of, I guess you could say, perspective.
Why do you, so maybe, for the listeners out there that are like trying to understand why it's such a big unlock, why don't you explain, why was this not possible before? So let's take the example of Binance Smart, Binance centralized exchange and then BNB chain. Why could they not do this before? How would you explain that to people?
Yeah, that's a good question. So Binance itself as a centralized exchange is exactly that, right? It has all of the dependencies that you need in the real world. Ultimately, yes, it's enabled by blockchain because they use that. Those are the assets that they accept for trading. But everything else essentially lives completely off of the blockchain, in the quote unquote real world, right? Again, just enabling you to trade these assets. They're like what you're trading on Binance is essentially backed by the digital assets that underpin their markets. But a big selling point of crypto is DeFi, right? The ability to just bank yourself if you're unbanked, or just do things that from a financial perspective you would never have access to as like a retail investor, right? Like DeFi is huge. We can all agree on that. So next to Ethereum, which at the time obviously was the only EVM chain, right? Because they literally birthed the EVM. Binance Smart Chain came to life, or BNB chain, some people know it as, which was the second ever EVM enabled chain. So ripped the EVM from Ethereum and created their own version of it, I guess you could say fork of it. This used BNB as the gas token. So this gave value to BNB because you would need it for transactions essentially, and then spurred an entire ecosystem there. And for those that remember BSC summer during DeFi summer, that was super crazy. Food farms, 1000xing, like that was super crazy. So yeah, like again, to be specific as to why it wasn't possible, these things were made mutually exclusive of each other. So Binance would exist as the centralized exchange, and a Binance product would be BSC, which obviously was Binance. It literally says Binance Smart Chain. But the point is, there was no crossover between the two. Like, what if you could be on BSC, which you use your own EOA on, not a centralized exchange account? You could be on BSC and access Binance level liquidity. That would be insane, right? Like, there would be a huge new DeFi primitive because you're accessing billions upon billions of dollars that you can go and run crazy strategies with, right? BNB carry trades, ETH carry trades, BTC carry trades. It doesn't matter what, like tons of crazy stuff. Yield products up the ass. I mean, like there's so much, right? And yeah, given the fact that they were made mutually exclusive of each other, At the time, to be fair, there was not clarity around DeFi at all. It was so new back in like 2020, 2021. Yeah, it was just very difficult for something like that to exist, I guess you could say, in connection with the exchange. But I just don't also see how they would have been able to structure it jurisdictionally as well, because like whatever happens to Binance may need to happen to BSC. They may need to geo block people using the chain. I mean, who knows, right? Like so much.
Yeah.
So yeah, there's a variety of issues there. The fact that Binance is a standalone company, the fact that BSC is a quote unquote decentralized chain. There was a big meme that came about, which was like CZ himself being all the validators for BSC. It was very obvious that it was extremely centralized, but nobody gave a shit because everyone was having fun. People had access. People were making money, right? Like nobody cared. So it was the price people were willing to pay for fun, gains, and everything under the sun. So Hyperliquid comes and makes this possible. And again, like as a reference point, Binance is not the only kind of example of this not being possible. Coinbase with Base, Kraken with Ink Chain. I believe OKX has their own ecosystem as well. Bybit with Mantle. Exactly. Yeah. KuCoin had their own as well. I mean, all of them tried it. But yeah, Bybit, for example, with Mantle, which I would say is a little bit more successful than typical. But the point being, like they're all mutually exclusive to the exchange itself. Look at Bybit's case; it has its own token as well, and it's a whole different name from Bybit, but it's literally Bybit chain, right? So yeah, Hyperliquid makes this possible because first of all, the exchange itself is built completely on chain, so there's no centralized component, there's no off-chain component. All of the order matching, execution, oracles, every single thing runs completely on chain. There's not a single off-chain component of Hyperliquid, and it makes it possible to do things like this. And essentially, while I can't speak on the consensus mechanism because this is a complete black box, they've built, at first it was Tendermint, as I mentioned, as the consensus mechanism that they used. This enabled them to have like a ceiling of 20,000 transactions per second. Binance, to our understanding, has like a current rate of like 1.2 million transactions per second. So last year in April, as I mentioned, this was a big turning point. HyperBFT was introduced. So Hyperliquid team announced it, and 2 weeks later, it was live on mainnet. It's crazy. HyperBFT was introduced again. Black box consensus mechanism, a variation of hot stuff, which for those that don't know, it was effectively pioneered by the Libra team from Facebook or Meta now, and enables now today pretty crazy speed, which is like 200,000 transactions per second and a theoretical ceiling of 2 million transactions per second. So Hyperliquid is extremely performant, and people have attributed this performance to 4 validators in the set right now, or the ones that actually participate in consensus. Today, the validator set has increased to 21, and only 5 of them are foundation validators, and the remaining 17 are all independents, right? Market making firms, so like HFT shops, validator firms, research firms. I mean, like basically anybody who typically runs a validator, right? Like it is decentralized. Now
that's
getting
exactly. We also run a node.
Exactly. Yeah. You guys run a node, so that's an example of that. So yeah, even DeFi protocols in that case, right? So that's a good example of the fact that now it's no longer just the 4. But yeah, so basically Hyperliquid's architecture is what can be attributed to what makes this whole interconnectivity between the exchange side and the actual general purpose smart contract layer, like EVM, like Hyper EVM to be specific, possible. So if you were to look at Hyperliquid as like a pancake stack, you have the first pancake, which is HyperBFT, which is the consensus mechanism. This is the layer by which both Hypercore and Hyper EVM abide by, ensuring that everything is ran correctly. And then above that, you have like one pancake, but that's cut into 2, right? They're not separate. Once again, they are glued together by what's called precompiles, which I'll touch on in a second. But the point being that you could think of them as 2 separate accounts is like the easiest way I've found to explain it. It's all the same global state, if you will. They're all in the same place at the same time, if that makes sense. But there's just 2, they're abstracted from an account perspective, where there's activity on Hypercore, which is the exchange itself. This is where all of the order books, perp and spot side, which are all parallelized, by the way, all running, again, in parallel. That's where they all live. That's where the staking module live. That's where governance is conducted, etc. Like this is hypercore. And then there's hyper EVM, which is a general purpose smart contract layer. This is where applications like Maker, DAO, Aave, stablecoins, you name it, right? Like anything, liquid staking by Kinetiq, DeFi protocols like Hyperbeat, et cetera, can be deployed, right? That's the best example that I can give ultimately about like what the two, I guess you could say, accounts look like. And what makes them intertwined is, again, what's called precompiles. So read precompiles, there's two so far, but read precompile itself allows for the reading of the balances on either side. So for example, like you're on the EVM side as a DeFi protocol, and you're looking to read somebody's balance on Hypercore. What does their per position look like? You can also look at like the BTC price, for example, and use that as an oracle, et cetera. So like it really upends and uproots quite a few different businesses in the space by just like one infrastructure, I guess you could say, or architecture advantage.
It's just more efficient.
So
it's just a lot better.
Oh, completely. Yeah, order of magnitude, if not more, in terms of efficiency. And yeah, like that is like the read precompile in particular at a very basic level. And then the write precompile allows you to then say, okay, I've read this information. I now want to write something to the blockchain to execute whatever action I would like with this information I now have. So for example,
so how's Kinetiq? Like, let's use Kinetiq.
Yeah, I was just going to get into that.
Yeah. Send it, bro.
Yeah, thank you. Yeah. So I very much love how, we're bouncing off each other in terms of the, just the implementation here, because it's extremely important in terms of the differentiation of Kinetiq compared to really anything else. In terms of the liquid staking environment as a whole, like globally between any other ecosystem, but on Hyperliquid itself, of course. And really the main reason we aren't live is because we're waiting for the write precompile, as everything else has been complete. So the write precompile, as I mentioned, allows you to write to the blockchain with the action that you've now read. So, or with the information that you've now read. So for example, in Kinetiq's case, you are reading that, or the smart contract is reading that a user has a balance of 1 million hype, right? Kinetiq smart contracts are then going to read this 1 million hype, see that the user has this, the user is deposited into the Kinetiq smart contract. Now the Kinetiq smart contracts will then write to the blockchain to move the 1 million hype from EVM to Hypercore, put it into the staking balance. So this specific account, right? So spot, perp, staking in this case, and then delegate it to a validator. The validator selection is then handled by what's called Stake Hub, which is a system that we've built that essentially autonomously scores validators and then allocates accordingly to them. So it removes the human element completely. It's like, I don't need to love or hate a validator, right? It doesn't matter what I think or what my other two co-founders think or the rest of our team thinks of any particular validator. If you do a great job, you'll get stake. If you don't, you will lose your stake. And this creates a natural incentive for validators to essentially, do well. And I guess one thing that people may not know is that the validator business is pretty interesting. The margins aren't crazy high, but validators love high inflation chains because they could just like reap the shit out of these rewards and just insta dump them, especially if there's a high commission rate that they can set. On Hyperliquid, it's very low. It's at 10% maximum. So you can't fleece people delegating to your validator. And what's really interesting is that there's been zero fee validators set up. So people are actually, burning money to run Hyperliquid validators, which is really good. Again, just contributing to the network for the sake of seeing it succeed. Again, maybe not all for altruistic purposes. But the point being that this is an action that occurs. This is a sentiment, a kind of a standard that's been set. So yeah, with that said, going back to the Kinetiq related implementation, the opposite happens too. So say on the EVM side, a user comes to the Kinetiq protocol and then wants to withdraw their stake. The read and write precompiles allow the Kinetiq smart contracts to read the user's balance on the staking side and say, okay, perfect. This user's 1 million hype. It now needs to get undelegated, first of all. Secondly, after the undelegation is complete, move this balance from the staking side or staking account to the spot account, and from the spot account to the EVM account. And this puts the hype right back into the user's wallet. So what's happening here? Essentially, you have a smart contract, the Kinetiq smart contract, deployed on the EVM side, that's then able to read all the information on the hypercore side, which in this case is staking and validator information. So it's fed all of this info by StakeHub, who's constantly reassessing and rebalancing at minimum of once every 24 hours. Validators to ensure that they're all essentially within range, like within the score threshold that StakeHub has set for them. The scores themselves are actually published on chain as well, so people will be able to read these scores and just be able to again pull this data and say, wow, okay, like this validator currently has XYZ amount of stake from Kinetiq, and then this is also their total stake, right? But you could see the amount that Kinetiq has delegated to them or is rebalancing to them actively, or from them actively as well. Funny enough. So yeah, it's funny, like validator operators have reached out and said, hey, like how could we work together? And we've just said there's literally nothing we could do. StakeHub is going to work as is. Here's the documentation. We're not publishing the formula either, so that essentially we can ensure that we have flexibility to just change things as needed, while still being able to be extremely transparent in terms of like what metrics dictates the scoring system on StakeHub. So again,
that's amazing. I think like we also have a staking background, and it's pivotal to have this system in place because otherwise you end up with scenarios where validators might like sort of approach it from a pay to play perspective, and they sort of come in and they try and sort of win you over to get a set in the operator, like to get a position in the operator set, and it just messes up incentives. And
it does.
I think this is exactly in line with your Hyperliquid ethos that you will win and you'll make it if you like do something valuable and you perform the best. And that's exactly how the market should be set up.
Yeah, it's super straightforward, right? Like there's I know I didn't finish this point, so like really quickly I'll touch on the fact that the validator operator business is interesting to an extent because validators will offer LSTs or restaking protocols or really anything essentially a kickback because of the commission that they take in order to actually just include them in the set. And while again, game is game, business is business, do your thing. The point being is like you said, right? Like the incentives are just super skewed towards who can offer the best deal rather than who's actually performing the best. And like, what should keep us up at night at Kinetiq is making sure that user stake is safe. So that's why StakeHub is built again on chain completely to interact with the smart contracts, who will then execute again everything on chain, right? So it should all be essentially, I guess you could say, living on the liveliness of the network as well. And as long as that's in a good state, then all systems are nominal, and we have redundancy in place to make sure that in the event that there is some sort of outage, which we have to be realistic, like can happen, right? I'm not saying Hyperliquid is perfect, but in the event of something like that, essentially we would just have the validators just stay put, right? Like no active rebalancing, just to ensure that there's no flashing event that could occur. So yeah, I mean,
when you guys, so like when you rebalance, right, is there a delay between, let's say you've got validator A and B, and you need to rebalance from validator A to B. Do you have to withdraw and then shift the assets over, or can you basically redelegate from one to another?
Yeah, so you would have to undelegate from a specific validator and
wait the 7 days.
So no, funny enough. So the 7-day part is basically from the spot staking to spot balance transfer. That's what takes 7 days. When you're undelegating, it's actually instant. But what happens is when people first stake, there's a 24-hour kind of warm-up period where you can't do anything. So yeah, essentially it depends on how much has been staked within the last 24 hours, right? Then maybe not all the stake will be able to be moved over at once. And also these transactions are batched. So the system will set a target and we'll actually publish this target on our front end so that people could see what it is. And then, whenever the transaction batching occurs, essentially people will be able to see that rebalance has happened and now the validator has XYZ amount of stake. So is there
any drag on the portfolio during the rebalancing process or not?
No, because everything's basically staked in the meantime. So yeah, there's a specific time of the day in which Hyperliquid distributes rewards, which is midnight UTC. So as long as everything happens by then, there's no missing of any sort of rewards. And that's the most important for us. So everything remains staked and delegated so that, no users are missing rewards. So we very much carefully plan around those timeframes.
Makes sense. Cool. Yeah. So let's like shift the conversation more into what's the bigger picture for Hyperliquid, right? So we have, for example, Unit Protocol acting as the tokenization layer on the chain, which is, it's a whole rabbit hole to go down. But for the listeners and for people that are trying to understand why this is more than just a perp DEX, and why it's also just more than just an L1. How would you pitch this to a prospective builder and say, hey, here's 3 reasons why Hyperliquid, L1 and the perp DEX together is objectively the best place to build the next application, and why it will be the most profitable for you to do so, even though there are no grants and things like that.
Yeah. I think Hyperliquid is essentially the only ecosystem where you have such wealth that was created for users who are actually willing to use applications. A perfect example of this was like I made I didn't think it was silly at all. I thought it was actually kind of like lowballing what would actually occur, but I made a pretty interesting prediction like sometime in March, the middle of March, I believe, that the Hyper EVM hype balance would essentially tenfold by the end of Q2, like sometime within Q2, right? And it only took like 10 days into Q2 for that to happen, which was super funny. And like, there was no real catalyst as to why I thought that was going to happen. I just said like, yeah, people are just going to get interested in what happens. And obviously the very clear, I guess you could say, catalyst that would occur would be that apps would start launching, people would start moving over. The ability for hype to be used directly against specific tokens, whether it's like the Buddy meme coin or anything in particular, like would essentially allow for people to justify moving their hype over from core to EVM. So this was like the main thesis as to why that would happen. And I still think we have like a lot of ways to go. So the balance at the time was like 1.4 million. And then it hit like over 14 million within, like 10 days or something. It was pretty crazy. And then now the balance sits at like 22 point something million. So yeah, it's really crazy. Now like 7% ish roughly of the circulating hype supply sits on Hyper EVM as like, just more active capital, I would say. Most of it is probably not just sitting in wallets, but now, Felix is live, for example. You guys are live at Hyperbeat. Hyperlend is live. I mean, there's a bunch of stuff happening. Multiple AMMs specifically are live, which are each pulling in hundreds of millions of volume, which is amazing. So yeah, economic activity on Hyperliquid is burgeoning, right? And now I think the ecosystem is ready for K-Hype, which should be honestly a huge unlock. And we are so excited about that because again, we really feel like we've built the product that we would want to use ourselves. So we're excited for everybody to get their hands on it, but this should very much be the glue between all applications on Hyperliquid, at least from a DeFi perspective, right? So whether it's a yield aggregation platform, a money market, a CDB stablecoin protocol, an AMM, it doesn't matter, right? It should all be glued together by the most perfect version of hype, which is liquid staked hype, earning yield, and then being able to be used readily available for DeFi. So that's the plan. That's the thesis. that's the vision.
Bullish.
Yeah, that's the vision. That's the vision. But yeah, so to touch on the specific point, answer the question more directly. As I mentioned, I mean, you have a ridiculous, I'll call it a cult of users who are just, rabid in using whatever is kind of built for the ecosystem. I think that there's a big emphasis on nativity, but outside of that as well is tons of support for things that are also not really native to the ecosystem. So Pendle, that will likely come to Hyper EVM as well. Veda, who we're working with, for example, who's coming to Hyper EVM. An example of this are other stablecoins, for example. Ethena just launched yesterday. There's USDT Zero that should be deploying sometime soon. They're also running a validator. And my understanding is that that's a ridiculously pricey integration, which, as you know, Hyperliquid would never pay for. So it's just
so it would actually cost around $5 million just to bring them on. So I think the community saved Mr. JF 5 mil.
Yeah, dude, honestly, exactly. I mean, imagine like this is a serious business and many chains out there would happily foot that bill. And that's why they raise so much money. Hyperliquid having raised none of it and still being able to get it for for free. Essentially, it's just absolute signal of what we're talking about, which is why it's the best place to build. You have all these integrations that are coming. You have users who are rabid enough, and like applications will command this flow. I mean, it's just ridiculous. Honestly, it's a perfectly ripe environment. It's like if you put every chain on some sort of petri dish and you looked at it with a microscope, like, let's be real, the vast majority of chains would be just a bunch of bacteria floating around, just like cannibalizing each other. And like, no, like I've never made this example before. Dude, I've never made this example before, but it's amazing. Like, I just straight off the dome, like most of them would just be a bunch of viruses and bacteria just fucking each other up, like, completely cannibalizing themselves. And like at one point they just implode, right? They just become EOS. You know, they just become shadows and shells of their former selves. And Hyperliquid is like, man, it's like just spores and spores and spores of like all this life creating bacteria, really. And I know this is a weird biological comparison, but the reality is, like, every single builder, for the most part, I've come across like maybe 2 disgruntled teams ever, really. And like the only reason that they're disgruntled is actually not to the fault of Hyperliquid, but because of the fact that infra has taken some time to deploy there, because like this is, again, an individual company level. Like, oh, does Etherscan want to do something? Probably not, because they charge $2 million. so why do something for Hyperliquid when Monad will happily pay you $2 million to do it? Barachain will happily pay you $2 million to do it, you know? That's an example of that. So like they've been frustrated by the fact that, okay, like the community's building stuff. Is it going to be institutional grade? Probably not immediately, but shit is happening, which is great. And yeah, like, again, you have this like spore of life that's on every single corner of the petri dish. I mean, you have shrubs growing. Meanwhile, the other ones are just barren deserts, essentially, of, yes, users, but again, cannibalizing each other, looking for the next farm, looking for the next Ponzi to just go and shit on the other. And will that occur on Hyperliquid? Maybe. I mean, Ponzis are everywhere. Memes are everywhere. Value extraction is everywhere. But that doesn't necessarily discredit what's happening on Hyperliquid. I mean, if anything, it's signal to the fact that there's life, right? So,
you know, I think that the reality is, for any sort of team, right? If you had to just go and launch on another chain, the probability of you just organically getting users and like having people that are interested in what you're doing, and then also deploying capital, it's so low, right? And it's really been our experience is like we didn't have like sort of like private whales or whatever, like to come and pop cash in the protocol. We literally just launch products that we, like you mentioned earlier, well, we just like it, right? And this is what I would posit into. And then naturally the community, right, rallies behind it. And I think, that alone it's very rare in crypto, right? Like, yes, there's a place to have sort of like deals with larger depositors and stuff. Like I'm not against it. It's more just that I don't think it's really possible in the majority of other ecosystems, maybe except for like the major L1s, like maybe Ethereum or Solana. But in most other ecosystems, you can't just launch and organically get users. It's like a hard slog just to find people to even open your website. Whereas here, it's like, oh, like someone released something new, the community gets excited about it, people help each other, and it's just worlds apart.
Yeah, and yeah, I mean, the community itself is a perfect testament to the fact that this is occurring, right? I mean, people get annoyed at .hls, but I think more people get. I think more people are kind of tired of like .eths on the timeline. Again, it's not war necessarily, but it's just funny. I mean, I've been called a zealot so many times, and that's okay. Like I'm definitely happy to be called a zealot. I don't really give a fuck.
Give us the pitch, right? Give us the pitch why Hyperliquid will flip ETH within the next 3 years.
Yeah, I said this last night, which is a hilarious narrative crafting, but I did say Hyperliquid will flip Ethereum. I very much feel that way publicly and privately, obviously. So that there's no change in my behavior. And then on top of it too, like somebody had asked, like, if I had to split, 50-50 between Hype and BTC, I literally said, I was like, look, I can't recommend anything, obviously, but like the point being that I think Hyperliquid will eat the world, and I'm acting accordingly. That's like my thesis in a nutshell, right? But why do I think Hype specifically will do numbers against Ethereum? And by that, I don't just mean like perform great, and like everybody has seen Ansem post like the Hype ETH chart, which is just a thing of beauty and should be hung in the Natural Museum of History. But yeah, I mean, it's going to be happening with everything, right? Like it's this beautiful performance against Hype DTC, Hype Soul, even, and like eventually there will be highs on every chart there. So again, while this sounds zealous, I'll break it down. Nobody knows how much Soul is actually in circulation in terms of like how much is locked, how much is in OTC deals, how much the foundation controls. I mean, it's a big thing, right? Like you can't see anything on Solana because the block explorers are that horrible. They have absolutely crushed it in terms of recent 1 to 2 years in terms of like user adoption and growth. Is that activity that is ideal for every chain? I don't know, but the point being, game is game, right? Like I think they've done a really, really fantastic job. I used Solana a lot. I mean, I pretty much don't use Ethereum anymore. Nobody I really know uses anything on Ethereum anymore. Especially with all the same applications are essentially just ditching Ethereum for everything else. And like, yeah, well, they may say certain things publicly. The reality is they don't care for anything like that. Institutions themselves are pretty much only grandfathered into using Ethereum because of like the Lindy effect and the fact that there's more infra there. So there's a matter of time before that moat is completely dismantled. All companies now are effectively just pivoting to ensuring that their infra is multi-chain, because if not, they will die. The Ethereum, I guess you could say, mentality and ethos itself is essentially completely dismantled. They have no idea what they want to be. I don't care if it's a Vitalik thing or some Ethereum Foundation ex-researcher who wants to go on a hiatus for 3.5 years and soul search across whatever part of the world they want. That's amazing, right? But I think that's why Solana's winning against them, like very much so. I think because they have a very clear capitalistic vision as to like what Solana is and what it should be. And I think any other chain would win against Ethereum in that regard alone. But again, Ethereum equal Lindy. So yeah, I guess those are the more important ones to touch on. Bitcoin has a very clear use case, right? Like I don't think Hyperliquid will ever flip Bitcoin because of the fact that Bitcoin is hard, sound money, right? And it should be has a very, very clear case. Whereas like Ethereum, you have this hodgepodge of different, really strong opinions as to what the hell it should be. Guys, we should call ourselves the world computer. Guys, we should call ourselves ultrasound money. Like you have no fucking clue what you want to be. Zero. On top of that, the Ethereum Foundation itself has obviously demonstrated that they have no alignment to Ethereum's long-term success because of the fact that they simply cheat the hell out of Ethereum, like their Ether tokens, like practically every other week. And this is okay, right? Like
it's accepted. It's accepted, and like it's just a bit comical, right? It was a big deal for them to use DeFi for the first time.
Oh my God, which is just insane.
Yeah, and it's actually quite funny because they finally open up a loan on Aave, and then ETH drops like 50%, and they close.
No,
and they close to liquidation, right? So you can just imagine the internal politics. But
wow, I didn't even know that they're close to liquidation. That's crazy.
I know, right? Like it's just. I think the story there is just it's division, right? There's too many visions, and it's sort of it's unfortunate. I mean, I hope they turn it around. I think it's just good for like crypto as a whole. But I think here in Hyperliquid, there's a very clear vision. I think everyone knows what we're working towards. Everyone knows what we're trying to achieve, and we can all row in the same direction. And we know that as we grow the pie for everyone, like everyone's going to win. So. Yeah, it's a clear difference. So I guess maybe to round off the podcast for today, we always like to finish with some bull posting and some price predictions. So
happy to oblige.
Give us some like some targets. Give us some moon numbers that we can start shelling to the broader crypto community.
Yeah, easy. So I personally think. By the end of the year, I think Hyperliquid sees anywhere between $100 and $200. This would translate to, 100 to 200 billion FDV. For those that don't know, Hyperliquid's current fee rate and at current price of roughly $20 will buy back its entire ready for sale supply, which is 194 million hype, meaning completely unstaked hype in circulation, right? That's translate to like 19-ish% of the available supply within 3 years, which is just absolutely ridiculous. Their new fee tiers just went live yesterday as well, which further accelerates this. So yeah, this kind of pressure on a token just doesn't exist elsewhere at all. The HIP3 part as well, which allows people to deploy their own perp markets for the light cost of 1 million hype staked, right, is like insane value accrual as well, which today translates to $20 million. Whereas like ETH, you need 32 ETH to spin up a validator, which is awesome, fantastic, do your thing. You need 10K hype to spin up a validator, which today is like $200,000.
$200K.
Yep, exactly. Jeez, I'm like so back in time and price. So on Ethereum, what's that? 32 times whatever the hell the ETH price is today. Probably similar, if not under the cost to run a hyperliquid validator today to get started. That is. So I think that's this year, $100 to $200, pretty easily, I would say. So yeah, that's set in stone. For me at least, I really do think that there's, as long as obviously macro conditions kind of allow for, I think that there's no reality in which that doesn't happen. If you talk to anybody, I find people very hard pressed to mention things that are genuinely exciting outside of hyperliquid. Really almost just doesn't exist. And yeah, again, not with regards to an echo chamber, like there are some other cool apps out there that are exciting, but like in terms of general applications, ecosystems, and the fusion between the two of them doesn't really exist. I think ETH will continue to bleed in price. I think institutions, for example, Standard Charter's price revision is like an example of the fact that people don't think ETH going to 10K is like not an overnight thing, but just probably not within like, I don't know, man, maybe ever. Who the fuck knows? It would take a monstrous amount of liquidity to do that, and you really need to have a single vision that people that are going to push something to $1 trillion market cap need to unite around. Personally, I don't see that happening. Personally,
agreed.
So yeah, I think other things, particularly hyperliquid, have a chance of doing that well before Ethereum. I think by the end of 2026, again, macro willing, I do think we see something ridiculous. I think we see hyperliquid flip Ethereum. We know Ripple has flipped Ethereum sometime this year for a brief period of time, which is fantastic, with the amount of supply that Ripple controls. So obviously this was done in a very dirty way.
The XRP, but that's a good example, right? Like the XRP army they truly believe that the technology is used in the banks, and that's enough. Yeah,
that's enough, dude. That's a great point.
That's to click the buy button.
Dude, that is so funny. That is a great point. Yeah, exactly. Which is just like the power of belief in this particular scenario. It's like it's just hard to believe in Ethereum. The UX is trash. The vision itself is trash. Whenever they bring up anything in terms of upgrades and roadmap related stuff, you just get flaccid immediately because it's going to take until 2029 for anything sizable to happen. So, I mean, like, I don't see an institution sitting there and like, getting excited about something like this when Vitamin is off doing, who knows what, right? It's just, I don't know. I mean, I'm all for decentralization, but at the end of the day, leadership is leadership. You need to have a very, very firm and core system of beliefs and culture around how things work. And the fact that we, I can't say I've been a part of it because I've just been a spectator, but the fact that Ethereum has spent, I don't know, over a quarter over drama around who's the president of the Ethereum Foundation or whoever the fuck is leading that shit show is just like absolutely comical. I think in any sort of corporation, that person would have either been removed immediately or just replaced with whoever's better. And there would have been some kind of damage control and crisis management, because that is a crisis. I mean, we're talking about losing hundreds of billions in market cap, right? So, I mean, I've laid out a lot of things. I can keep going, but the point being, I do think hyperliquid flips Ethereum in a very short period of time relative to Ethereum's existence. And this is for a number of reasons I think I've highlighted. I'm happy to go into more, but I think $500+ end of next year, macro willing.
There we have it. All right. So thanks, Omnia. Thanks to the Kinetiq team. I think we're all super excited to have you guys go live on the HyperEVM so that we can just ape like we've been aping every other protocol. Is there any, maybe for the listeners, like where can they read up a little bit more about what you guys are cooking and how can they get started?
Yeah, Kinetiq_XYZ on Twitter. Come on over, read through everything. We'll have a ton of integrations lined up. Obviously, Hyperbeat support, which is amazing. So we super appreciate that from you guys. really just set up K-Hype to essentially be the perfect vehicle for hype, regardless of how sophisticated you are as a retail depositor or the most advanced trader on planet Earth or an institution. So it really doesn't matter if you're holding hype. K-Hype should be top of mind for you. It should essentially make you feel that holding hype by itself just does not make sense. So yeah, that's the idea overall. And this means integrations on top of integrations on top of integrations. You should live and breathe K-Hype in terms of using it everywhere. The protocols that are built on top of Kinetiq should do the same. And that's what it's all built for. So thankfully, our experience helped create this type of experience now going forward for users. And yeah, honestly, I could not be more excited. The team cannot be more excited. So we very much thank everybody for the support, on and off the field, so to speak. And it's going to be very exciting, time ahead, honestly. So could not be prouder to do this or more proud. Geez, horrible grammar, I guess, but could not be more proud to do this on Hyperliquid. For those that don't know, I mean, we've literally only ever spoken with one person from the team regarding anything Kinetiq related, funny enough, which has been Zulian, which you guys may see on Twitter every so often, who's just helped us with like certain technical questions. But otherwise, I mean, man, like it's such a breath of fresh air, honestly, from a developer POV. So couldn't be more excited. And again, big thank you.
All right. Thanks for joining the pod. And thanks, guys. Have a good one. Cheers.
Peace.